Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. Welcome to the Token Metrics Monday live stream. I'm your host, Bill Noble. This live stream is brought to you by tokenmetrics.com. Please like and subscribe to this channel. If you like our content, generously hit that like button. I am joined today by my colleague, Forrest. Forrest, welcome to the show.
Hey, Bill, how are you?
I'm doing good. Thank you. All right, let me just welcome a few people to the stream. Crypto Student, Taz, as always. Drew X, Tunk, Farmer, Sam, Forrest, Aiken. Welcome. Thank you for being here with us. Forrest, have you got an agenda for our stream today?
Yep, I'm going to go over it right now. And what did I do just right now? I shared the live stream. I hit like, first of all. I'm already subscribed. And then I shared it on Twitter. But we do have a agenda to go through. So welcome to the Token Metrics live stream. The title of this stream is Bitcoin to 35K ? Major support levels explained, Q4 parabolic predictions. If you don't already, follow us over on our social media channels, Token Metrics Inc. on Twitter, Token Metrics on Instagram. We're on Facebook, YouTube, obviously, because that's where we're at right now. Token Metrics on LinkedIn, and we also have a podcast. Now, let's jump right in. If you aren't already a subscriber at tokenmetrics.com, head over to tokenmetrics.com and subscribe today for awesome, incredible investment research and newsletters in your inbox every single day, as well as an incredible AI machine learning based dashboard to help find the next big crypto opportunities. All right, so our agenda today, I'm actually going to go first, and then Bill's going to give the market update. So I'm going to be talking about buying support and selling resistance. We're going to do a little crypto showdown, maybe some altcoin overtime. I've got some altcoin charts in the bag. And then a little Q&A session at the end to wrap things up. So if you want to interact with this live stream, scan the QR code on the left or go to www.menti.com and use the code 990647222. Link in the description, or not a link, but rather the code is in the description below, so you don't have to pause there to get that code. And we're going to jump right into it. Before we do, we're not going to be really talking about altcoins. I know this says top altcoin pick for January of 2022, but what I really want to know is, in January, where do you feel the safest? Do you feel the safest with your money in Bitcoin, ETH, or in stable coins, and why? So that is going to be Crypto Showdown, Bitcoin, ETH, or stable coins for January. Go ahead and head to Menti.com and use that code above if you would like to participate. Now, I'm going to be talking about Bitcoin specifically, support and resistance levels to look out for. I do briefly want to show you guys altcoin dominance, the inverse of which is Bitcoin dominance. So Bitcoin dominance is bottoming out. I know this is the top of the chart here, but this is an altcoin dominance chart, meaning Bitcoin dominance is very, very low. In fact, it's lower than it's been in a very, very long time. If we zoom out, this is close to the all-time lows that we saw back in 2017 and 2018. So I do think that altcoins can push higher, and we could see some sort of an alt season in 2022. And in the long run, I do think that altcoins will continue to eat up some ground against Bitcoin, but Bitcoin could be due for a push back down to the bottom of this trend channel. Now, total cryptocurrency market cap. I just want to give you guys an update on this as well, because the risk levels to buy the crypto market right now are lower than they've been in a while. We are now at 360 days to fair value. So I'm going to actually show you guys this entire chart. This chart goes all the way back to 2013 and 2014. We've got this nice linear trend line on a logarithmic scale. And that can be used as our fair value trend line, because this is the trend line that's held as support for years and years and years, 8 to 9 years to be exact. Now, previous market cycles have peaked as high as 1,449 days to fair value, meaning from the peak, it would take roughly 1,400 days for this trend line value to catch back up to those levels. We are currently overextended against the trend line. We're in a bit of a small market bubble, but we would expect to be in a market bubble with everything going on in the world right now and all of the rampant printing of money and whatnot. A lot of asset classes have been in bubbles for a little while, so this is nothing to be too concerned about. However, our recent peak of total cryptocurrency market cap up here brought us to a peak of about 616 days to fair value. 616 days for this trend line to catch up. Now, if we took our previous peak back in May that we crashed from, we were at a roughly 718 days to fair value. Right now, currently, as of today, at $1.9 trillion total cryptocurrency market cap, we are only 360 days away from this trend line catching up to this value, meaning the maximum expected length of a bear market. Everyone's asking, all right, if we go into a bear market, how long is it going to last? The longest it would last would be roughly 360 days. We wouldn't expect it to last much longer than about a year from today. So that risk is pretty low in comparison to where we've roughly been, or where we've been roughly. It's about 50% lower. So buying this dip is actually becoming more and more attractive every day. Now, of course, there's the opportunity for us to break below this and head back down to this trend line over time, but we would expect this trend line to bring us back higher within 360 days. Now, let's move specifically into the Bitcoin support and resistance levels. So I'll let your eyes adjust for a second because there are a ton of lines on this chart. But really the most important lines on this chart are this blue downtrend line. And I'm going to make this 2x short level blue as well so that you can just draw your attention to the most important levels on this chart. Right. And the reason these are the most important levels on this chart is because they're respectively our support and our resistance levels. So the big support level, and this says 2x short, it's actually more accurately a 1x short level, but this is essentially the level at which support runs out, or not support, short leverage shorters run out of incentive to short Bitcoin. Once Bitcoin gets to this 34.5 to 34.7K level, you really can't short it and hide your liquidation point or keep your liquidation point against or above these two local highs, the all-time high and our last retest of this blue downtrend line, with the respective leverages of 1x and 2x, right? So this is where all of the short leverage runs out, 34,700. This is also the level at which, if we extend to the left, we see a lot of consolidation happening on our previous drop from May, and a lot of resistance when we started consolidating below 34,500 to 34,700, right? So this is a key support and resistance level. This is the level that I personally will be buying very, very aggressively. And Bill's going to show you the 21-month moving average in just a moment. I don't have it on this chart, but the 21-month moving average is coming up around $34,000 right now. So by the time Bitcoin could crash to this level, we'd be looking at a lot of support around this level. So if Bitcoin crashes, and I'm not saying Bitcoin's going to go to this level, but if it continues to go lower and lower and lower, this is where I would expect the bounce, and this is where I would want to be a buyer of Bitcoin, right? And correspondingly altcoins while Bitcoin bounces. Now, we are currently on a pretty decent support range, and we've actually been on a pretty decent support range for a couple of days now, 40 to 42K. Obviously, you can see the consolidation in this level, the previous resistance, which is now becoming support. Right, so 40 to 42K is support. So you can the 40K and the recent low we had around 39.6 earlier today, which is in line with the wick that we had over here on multiple trend lines. You can justify taking a small long position here, right? We've already seen a pretty strong wick up or a pretty strong candle, a hammer candle. Getting rejected, Bitcoin getting rejected at 39.6K. This is in the short term on the daily candles here, a show of strength out of Bitcoin, a show of rejection from going below 40K, and we're getting some resistance at 42K. But as long as we're consolidating in this region, preferably down towards 40K, you can warrant or justify an entry point down here with the intent to resell any type of retest of this blue downtrend line, which could be anywhere between 44 and 46K. And you might be thinking, why would I sell? A lot of people have this hodl mentality, and I do too. But as far as a shorter term trading perspective and unlocking some stable coins, just in case we do go into a bear market, I'm a big fan of selling downtrend lines, selling resistance when we're in a downtrend. Why? Because if we do go up to challenge this downtrend line at 46K, there's a really strong chance. Well, first of all, one of two things can happen. We're either going to get rejected and we're going to go back down, in which case you sold the top and you can buy back Bitcoin cheaper, or we're going to break through. But if we break through, almost never after a downtrend, in fact, I can't find any instances of Bitcoin breaking a downtrend and not coming back to retest that same level of support or even lower, right? So there's a strong chance that even if we do break through this downtrend line, you'll be able to buy back your Bitcoin that you sold at 46K, right? Down here at 46, 44, or even 42K before we get a move upwards, right? Now, the last downtrend retest, right? The resistance of this downtrend was around $52,000. And had you sold this resistance, you'd have been rewarded for that sale of Bitcoin by being able to buy it back cheaper now at roughly 40 to 42K, right? So I'm a big fan of selling resistance here. So if we do see a bounce back up to 46K, note that it doesn't mean that we're necessarily going higher. We want to sell that resistance and then buy back at a lower level. And while you're selling that resistance, you're hedging against the chance that Bitcoin fails that retest and continues this downtrend. Because right now we are in a downtrend, and usually you do not want to fight the downtrend. You don't want to fight the trend, whether it's up or down, but you especially don't want to fight a downtrend. I'm going to show you one or two more examples of where you could have sold the retest of the downtrend line and come out on top, right? So we had this downtrend line earlier back in May when we started to crash. And had you sold the retest here at around 44, 45K, right? Yes, Bitcoin did go higher and you could have sold it higher, but you were hedging against the chance that that this was a dead cat bounce and Bitcoin was going to go back down to lower levels. Right. So you're actually able to buy Bitcoin on the retest on the top of this downtrend line, at around 39 to 40K down here, or even in this consolidation pattern. So even though it passed the retest, it broke through this resistance, you were still able to buy it for cheaper as support over here. So that's the concept. You want to sell resistance and buy support. Sell resistance and buy support, right? I'm going to show you another example going back all the way to when, and you can see I've already charted this out for you guys, but I'll delete these really quick. Back in 2017 and 2018, when we did go into a bear market, where was the optimal point to sell Bitcoin if you were trapped in this downtrend? If you were trapped in this downtrend and you didn't have the good fortune to take profits up here, well, we established a downtrend, right? And where did you want to sell? You wanted to sell the retest. And if we are going into a bear market like we did back in 2017 and 2018, which I'm not saying we are going into a bear market, but there's a chance, of course, that we are, you want to be able to sell this resistance so that you can go back and buy at support over here for much cheaper, right? If you sold this retest, if you sold this retest for $11,700, let's just call it 12K for easy math, and then turned around and bought back at just over 6K, you almost doubled the amount of Bitcoin in your portfolio. You could have sold, let's just say, one Bitcoin for $11,000 and then turned around and bought 1.7, 1.8, 1.9 Bitcoin down here for $6,000 or $7,000. Right, at a much, much cheaper price because we were in a bear market at that point, right? Now we retested it a second time, right? We retested it again, and it would have been smart to sell this again, sell at $8,700. And guys, when I say sell, it doesn't mean sell your entire portfolio. Take a managed risk position, maybe 1 to 5% of your portfolio, to make a trade, sell the resistance. And in this case, we did break through resistance. But because we're in a bear market, and even if we would have been in a bull market, we still continued to find support down on this level over here. And you could have bought back much, much cheaper, even after we broke through this resistance, right? You could have bought back at the same price, no harm, no foul, and preserved the amount of Bitcoin in your portfolio. Even if we would have gone back into a bull market, there's a very, very strong chance that you would not have gotten left in the dust. We probably would have come down and done what is called a bump and run, and you could have bought back at the same price or cheaper before we moved back up higher. This is a pattern that happens over and over and over again, and you almost always can warrant or justify selling this retest. I'll give you one last example. Back in 2021, January of 2021, this is when Bitcoin really had its first big correction of the bull market. This is around the time where Elon Musk and Tesla were really getting into Bitcoin. And if we cut down to the 4-hour chart here, you'll be able to see the detail a little bit better. Right? But if you sold this retest, you could have sold this retest multiple times and bought back cheaper, multiple times, bought back cheaper. And then even when we finally broke through and it looked like you were going to get left in the dust, what happened? This was after Elon Musk announced that he owned Bitcoin, or that Tesla owned Bitcoin. We still came back down to find support on this level, and you could have gotten back in for the bull market finishing off here, right? So by selling these retests multiple times, you can make this trade where we can buy back cheaper. And that's the situation that we're in right now. We're in a downtrend, and we want to sell the retests of this downtrend. It's no different, right? It's no different. If I go to Matic, I'll go to Matic because I know Matic has an incredible trend line right now, if I can find it. It's no different than when you're trading something that is in an uptrend. You want to be a buyer, right, of the support. You want to be a buyer of the support. Right? Accumulate and buy when we hit support, which we're on right now. In Bitcoin's case, which is in a downtrend right now, what do we want to be doing? We want to be a seller of the resistance on the trend line over and over and over again. And then even when it does break, we can get back in a little bit cheaper. So I hope this concept of buying the support and selling the resistance, which is obviously a very, very basic concept, but I see a lot of people mess this up and not do it. They do the exact opposite. They actually sell the support thinking we're going lower, and then we get a bounce, and then they buy the resistance and they get completely turned around in the market. This is a way to not get turned around in the market and actually have a strategy for the way these things move, or strategy for the market. All right. So with that, I'm going to end this segment, and I'm going to pass it over to Bill, who's going to give you a nice full market update.
All right, Forrest. Thank you. I'm in work as usual. All right, friends. This is your market update. Stick and move. All right. It's from an old Rocky Balboa movie. This week, you're going to have to bob and weave. Some stuff's going to go up. Some stuff's going to go down, most likely ending the week with an across-the-board Bitcoin and crypto rally next weekend. So I want to give you that. Plus, I want to talk about what's going to happen perhaps later on in the year to give you a little bit of hope. Okay, let's begin with legacy, because legacy and related gymnastics in stocks and interest rates have been the primary mover of crypto. So for a change, there's good news in legacy. Chinese stocks, as measured by Hang Seng, the stock index of Hong Kong, is going green and looks like it's really squeezing out shorts as the Chinese central bank adds liquidity, lowers rates, or pushes money into their market to keep their stock market and their economy supported because of the COVID shock. So when I see Chinese stocks were red, rejecting their moving averages like a week ago, that was a warning. Now they're going green and they're breaking out. So that leads me to believe that crypto can be maybe a little bit more stable and rally towards the end of the week. Now let's look at fear in legacy. That's VIX. Okay, that's an index that measures fear. It's like the fear-greed index of crypto. All right. VIX got to its top Bollinger Band this morning. What's a Bollinger Band? It's something that uses statistics to create a nice technical analysis band around prices. Okay, normally VIX does not spend extended periods of time above its Bollinger Band. So the fact that there were people willing to sort of sell fear at the top of this range leads me to believe that the fear trade in equities may take a 1-week break. One of the other reasons why the fear trade in equities may take a break is the chart of the U.S. 10-year note yield. As you can see last week by that giant green candle, the interest rate on the U.S. 10-year bond went dramatically higher. It went from like 1.5 to 1.8%. And you're like, oh, that doesn't sound like a lot. Well, if you do the bond math, it's actually a huge move. And if you look at the size of that candle relative to the other candles, other weekly candles, it was huge. Now, one of the reasons why rates went up, okay, why did interest rates go up and bonds go down? Well, the Federal Reserve came out and they said, hey, we're sick of inflation and we're going on the war path. Now, that said, that was all before this Omicron-related crisis hit, and everybody's got to stay home again. So interest rates went up a lot because everyone's afraid of the Fed. But on the chart, it looks like on the weekly, the 10-year note government bond yield has gotten to its 200-week moving average. What is that? Well, it's kind of like a long-term average. Have you ever heard a reversion to the mean? So 1.8% may be a level where the 10-year note consolidates on in the short term. Now, if the 10-year note blows through that at 1.8K and heads towards 2% or 220, then I don't care what buy levels are below the market in Bitcoin or otherwise. Crypto is going to get wrecked because stronger interest rates or higher interest rates led to the dot-com crash in 2000, and they were a component of what happened to crypto in 2018. Net, it looks like the bond market is done puking for the moment. Interest rates may be done rising for the moment, which can give crypto a week of relative stability. That means the whole market may not go down all at once, all on the same day. So fear in legacy is lower. Now let's go to crypto. CME Bitcoin futures. Why look at this? Well, because that's what's in the Bitcoin ETF, which we still expect people to buy in January. Now, I'm showing Gann support and a prior low just below 40K. I know there's a lot of orders down there. Everyone knows it. Michael Saylor's probably down there along with Novogratz. Okay, I don't see a case for Bitcoin below 40K unless interest rates rise or stocks collapse or both, right? So if Bitcoin is stable, maybe it's a stable week in Bitcoin. Maybe there's one flush to try to test 39, but I'm suspecting that there's going to be a Bitcoin rally maybe next weekend. Okay, what happens in the meantime? Well, I don't know. We'll get to that in a second, but let's look at a long-term chart of Bitcoin. I know, the busiest chart ever, but let me give you the bottom line. The 200-month moving average is at 34K. That's the green wavy line. So if there's a disaster in Bitcoin, that's probably going to be support. This chart uses Gann cycle work. I won't go through the details, but I suspect that the stock market problem is going to be worked out by October, meaning there's going to be a sell in May and go away and a Rectember. And this work shows an October bottom in Bitcoin. Now you're like, Bill, why are you telling me about a Q4 rally or a monster parabolic in October in January? Well, it's because if this market continues to be the way it is, where it's very choppy, It lurches lower on weekends. I don't want you to lose all your money and rage quit crypto in February when there could be a huge parabolic starting in October. I also wanted to tell you that 34K in Bitcoin is long-term support in the event that as soon as I get off this live stream, it's a debacle, which is something that happened last week. Funny, not funny. Okay, looking at Ethereum. Now, unlike Bitcoin, it's tough for me to find really good support in Ethereum. Maybe it's at 2,800. Maybe it's at 2,400. It feels to me like Ethereum can wick down to 2,800 or below. It's just kind of a creepy sense because I don't see the punch in Ethereum. Like it should have gone up in December. It didn't. It should have outperformed Bitcoin in January. It hasn't, right? So I'm guessing that if there is a final puke lower this week, it's going to be in the over-owned layer ones. That's ETH, Solana, AVAX, and maybe Phantom, right? In other words, where are the stops? Are the stops in Bitcoin below 40? I don't think so. I think that's where the buy orders are. Where are the stops? The stops are in the coins that are over-owned. Okay, just as simple as that. Not because they're bad or good, just because people may have risk that they may puke out if the market goes lower. So if we're talking about a market of cryptos, I perceive that there's some risk still in ETH, whereas Bitcoin looks fairly, is on decent support. Now, that doesn't mean I'm super bearish ETH. It just means I can't figure out where support is. And a lot of times, obviously, the ultimate arbiter of where support is Mr. Market. Now, looking at ETH long term, okay, I still suspect a bottom in November. The 21-month moving average in ETH is at 2K. So I'm not even sure we see the July lows in the event that there's a disaster in ETH. ETH, I think, could actually trade in a range. All right, so we'll see if ETH ever sees 2K. I don't think that's a near-term phenomenon. That may be something that happens near March. I also think that just for the sake of pie in the sky, okay, not only do I think there's going to be a bottom in ETH in November, but if there's ever going to be a flippening, that might start in April 2023. In other words, the parabolic in ETH, the return of ETH may be April of 2023. In the meantime, you may have to accept a choppy range trade. One of the most important things to understand about crypto is that we're used to all the way up, all the way down. I think it's becoming obvious by the way this market trades that 2022, by and large, could be this wavy consolidation formation, even if there is a big break lower in May, right? Expect chop. Now, let's switch off of that, summarizing first. So Bitcoin on support, don't know where support is in ETH, afraid of a flush lower in layer ones. That's part one. Part two is what cryptos are intriguing that have been hammered or are rallying. The one I like to look at now is Rune. Okay, I'm watching this ecosystem both for DeFi and NFTs. I see support at 5.2. I'm going to get involved in this. I'm not now, but I'm going to. And then there's 3.39 below the market. So if you see $5.20 hold in Rune, that could be a good sign for all of DeFi. Because there are certain parts of DeFi that are rallying, and it's easy to like those. We'll get to those in a minute. But I like Rune at 5.2. And if they destroy it down to 3.39 for whatever reason, I'm interested. Because that was a low back in July. And I think this is a very underappreciated DeFi ecosystem. As a matter of fact, don't cut this out and record me with your phone, haha. But I'm wondering if Rune could wind up being the next Luna. Near protocol. Okay, in layer ones, it looks like we're playing the winner-take-all game, right? The winner-take-all game is near up because it's a layer one protocol that has interoperability. What does that mean? Well, it means it can connect to other blockchains. So Aruna was asking earlier, what's the difference between layer 1, layer 2, and layer 0? Well, layer 1 has smart contracts or software where you can do things like trade, borrow, and lend, like DeFi, or buy NFTs, right? Layer 2 is something that helps you do something on a layer 1 without the gas fees. And layer 0 is something that connects it all together, all the different layer 1s together, right? So Near is a layer 1 that has a layer 0 kind of twist to it, which is why, of course, at the prior high of 13, everybody was interested in buying it, and Near is up 10% today. Now, Near may wind up going to 19 all by its lonesome, and I get this feeling that like Near and Cosmos, Chainlink, may be these like monsters that rally even if ETH goes down. Or ETH could go down along with AVAX and Solana, and these coins could hold steady. Obviously, I can't predict the exact move, but obviously, people want to park money in Near. Okay, now on the other side, there's Avalanche. Okay, so Avalanche may be in the midst of like a zigzag correction. That means it goes down, back up, and then makes a new low for the correction. So if AVAX is above 94, it's good. Otherwise, AVAX could hit 73, 66, or maybe even 60, right? In other words, when I look at AVAX, I get the same feeling as ETH. I'm like, I don't really know where support is. And if Elliott Wave is right, then, it's going to go below the mid-December lows. How low? I don't know. This is the part of the presentation where I echo what I said on Friday during the market update. The best investment strategy is one that helps you sleep at night. If you want to hodl AVAX, that's fine, right? But you got to ask yourself, if AVAX is at 60 or 70, will I be panicking? If the answer is no, then you can sleep well. If the answer is yes, I'll be upset, then perhaps you should think about raising stable coins or reducing your position so that you can sleep at night, not investment advice. A lot of people got long AVAX. A lot of people got really enthusiastic. And a lot of times when people get really excited, there can be a flush lower. So while Bitcoin is okay, I don't know where support is in ETH. And in Avalanche, I suspect they're going to take out the mid-December lows somehow, sometime this week or next. Now, Solana is very much the same thing. I wanted Solana to get back above 180. It did it for about 2 days and failed. That means this huge head and shoulders top formation not only exists, but has been confirmed. So Solana could go to 100. And I was noticing that Solana is now slumping below a key GAN level at 140. So this, again, leads me to believe that there could be like a give-up heave in ETH and Solana and AVAX, right? Maybe people are going to come in and buy NFTs on this network and sell these currencies against it to hedge the currency risk, right? Maybe it's long ETH-based NFTs, short ETH for a week or two. I don't know, honestly. That's why it's stick and move, right? When it comes to layer 1s, it looks like Near is going to take the cake short term, which means you got to be careful in these other things. You got to manage your P&L and you got to manage your head, because if Bitcoin's going to turn around and go from 39 to 46, or it's going to puke to 35 and then go to 52, you want to make sure you got your wits about you and you're sane. Sane. Now let's talk about Phantom. This is kind of a toss-up. Is Phantom a buy the dip on the GAN level at 223? Or is Phantom going to go down and go to $1 and change? Tough call, right? Probably depends on what total value lock does. Phantom is not really trading well near its 21-day moving average. I'm leaning towards buying Phantom, AVAX, and Solana lower. Hopefully, I don't eat those words, right? In other words, if I'm like, I want to own Phantom, I want to own ETH, I want to own Solana, I want to own Avalanche, I would say wait and make them sell it to you at a good price. The whole market turns around tomorrow and, we're all singing the Crypto Happy song. Great, you get involved then. But I don't want to be a buyer of Phantom at 223 only to see it go to 180, right? I'm not bearish Phantom. Matter of fact, I kind of want to like it, right? But the chart has to give me a reason to. Right now, it's holding support, so that's okay. If I had a Phantom position or I had a small Phantom position, I wouldn't be freaking out. But does it look like a raving, screaming buy right this second? No. Okay, Polkadot. Oh, God. Is Polkadot going to be the end of me? Maybe. I was looking at January 9th to be a big GAN date. Something big was going to happen, and all I got was a shitty little green candle out of it, and then Polkadot proceeded to go down again. I mean, the stochastics show Polkadot is oversold. Interoperability is a great thing. Cosmos trades well. Polkadot is below support around 25. So I can't get bullish until it gets back above that. But, like I said, I guess Polkadot might be a dollar cost averaging thing, maybe like Bitcoin, right? If you're in Polkadot, you've got to say, can I stay in this and dollar cost average? If the answer is yes, you do one thing. If you're like, I can't take it anymore, then you have to make a different decision. But personally, I have a really hard time being bearish Polkadot, even though it is, again, being a pain in the ass. Now, on to something a bit more refreshing. Chainlink, all right? How about Chainlink? Chainlink closed above its 21-week moving average, came back down, retested it, and rallied again. Now, if layer ones do get smacked, Chainlink, I actually think, could go up, right? This was a dormant, boring coin last year. People, including me, wondered if it was dead. Well, it's not dead. It came back from 15 after everyone gave up on it. And I suspect Chainlink at 50 is something you're going to see at some point this year, right? At a minimum, I think you could see Chainlink back at the top end of its range at 37, particularly if you get a Bitcoin ramp at the end of this week. Do not underestimate Chainlink. Now, Axia, speaking of do not underestimate, this chart is a commercial for tokenmetrics.com and having the dashboard and the portfolios that come with it. This has been a top-rated project. I've been talking all along how it's kind of like a new form of money. I picked it up at like 3.5, said it was going to 4.5, and then today it hit 9. So, people are interested in new forms of money. I wanted Dash, still do. Forrest wants Nano, still does. But Axia appeared, and this new form of money moved. Okay? So all I can say about that is tokenmetrics.com. Speaking of that, let's talk about the Coinbase daily index. It's been very useful to use our daily indices to figure out what coins are good for that day, and if they show up day in and day out, what coins may continue to trend, even if the market is choppy or going lower. Especially if the market's choppy, our indices have been picking up stuff that's been rallying. So, Yearn Finance, Chainlink, Cosmos, clear bid for those projects, right? ICP is also in there. Let's go through some of the charts. Cosmos. Okay, it didn't pay to buy Cosmos at 44. It doesn't pay to buy at resistance. Hopefully, that's been clear. Forrest just told you buy support, sell resistance. That said, Cosmos hit resistance at 44, comes down to the 21-day moving average at 33, and everybody was down there buying. So if it's a choppy to sideways week, I suspect there's going to be a bid in Cosmos. And if the lows are in, then Cosmos is going to 50, not investment advice, right? In other words, if there is no final puke in ETH, Avalanche, and Solana, Cosmos is going up. And as soon as they get done with that puke, that may be Cosmos at 50. That could be Cosmos at 80. So the bottom line is, in Cosmos, if you get the dip or range, Mr. Market is telling you that Cosmos is something you need to be buying on dips, not investment advice. Now, Yearn Finance, they've changed their tokenomics. This is the renaissance of DeFi 1.0. What's going on in the bond market with the Fed and inflation? I wouldn't blame some institution if they just came out and said, you know what? I'm sick of worrying about this. I'm going into crypto. I'm going to get a yield that's bigger than inflation, and I'm just going to park some money. And the place that that's going to happen, if it happens, is Yearn Finance. Okay? The tokenomics on this have changed. The Elliott wave looks like a series of ones and twos, and this could be one of the biggest rallies anybody's ever seen in DeFi. Okay? Not investment advice, but if our AI is right and the Elliott wave is right with the change in tokenomics, this could be an absolute monster move to the upside. Okay, ICP, not exactly on the monster move list, but, you know, everybody seemed to give up on it in late December. There was this puke below the July lows. It came back, broke a trend line. You know, there's decent support at 29, and it trades okay. So if you're looking for a value investing play, ICP is interesting, although not a moonshot. Also, you know, there isn't the downside risk that there is in other coins that I've highlighted elsewhere. Now, Sushi, heartbreaker, right? Thank God I didn't FOMO at 10, right? I thought, you know, 8 might have been a good buy. And of course, you know, not investment advice. Okay. It knifes down all the way to 678. Now, I would love it if the lows were actually in and Yearn and Chainlink and Cosmos led the way out. And I didn't have to sweat ETH, Solana, and AVAX until maybe next week. If Sushi gets back above 678 and starts making green candles, that would be a hopeful sign. Conversely, if Sushi can't get going or just sits here and acts shitty, that would make me nervous about the big layer one coins. I definitely want to own DeFi. I definitely want to own interoperability, but you got to make sure you get them at the right price, because there is nothing worse than getting the narrative right, getting the coins right, and getting stopped out where you should be buying. And that, folks, is the market update.
All right. Thanks, Bill. Now, do we want to jump into a little a crypto showdown?
Yeah, sure. Go ahead.
All right. So, crypto showdown, what is your best store of value for Q1 of 2022? Where are you putting? We talked about the potential for a Parabolic in October later this year. Where are you putting your money in Q1 of 2022? Are you feeling safe in Bitcoin? Are you feeling safe in ETH or maybe some altcoins? Or are you stable coining up? Me personally, I am staying in a mix of altcoins with my Ethereum positions, as well as some other altcoins. But I'm increasing my exposure to stable coins by about 20%. I'm going from a 10% stablecoin exposure allocation to about 30%. Because if we are going into a bear market, and again, I don't think it's extremely likely. I think it's a very plausible. Obviously, we're down quite a bit from the highs of $69,000 for Bitcoin and $4,800 for Ethereum. Almost nothing is near its all-time high, with the exception of near, no pun intended, I want to start increasing my stablecoin allocation just a little bit, just in case we do go into a bear market, because I want to have stablecoins to deploy at rock bottom prices. And even if we don't go into a long extended bear market like we did last market cycle, I personally believe there's a strong chance that we could see some flush outs, like a V-shaped bottom, something like we saw back in March of 2020, where crypto in all markets kind of got scared and crashed. Bitcoin dropped down to $3,000. I want to have some stable coins on hand in case there's just a surprise dip out of nowhere that I can pick up and buy on support. Bill, what do you think for store of value 2022 Q1?
I'm going to go with Bitcoin. I'm going to stay with Bitcoin. And here's why. I mean, obviously you need to have 15% or more in stablecoins, right? That's kind of a given to me. But I think Bitcoin, if there are going to be bear market rallies, Bitcoin and NFTs are going to be where it's at, right? Along with interoperability. So if I had to park money somewhere with Bitcoin around 40K, I'd go Bitcoin. And I'm only saying that because you picked stablecoins. But I think stablecoins and Bitcoin should probably be 30 to 40% of a defensive portfolio, not investment advice.
All right, let's see what the winner was for Q1 of 2022. Yeah, people are picking stable coins. Yeah, I think Bill put it best. That's that Bitcoin and stable coins, and even a little ETH in there as well, really makes up a defensive portfolio. Just on the off chance that we do go into a downtrend. We're already in a downtrend, but this downtrend continues to move to grow. And the big thing that made me personally choose to up my stablecoin allocation from 10% to 30% for the foreseeable future, maybe not for all of 2022, but for at least the next 3 to 6 months here, or until we start to see this trend change, is that stablecoins are earning ridiculous APYs on Terra, on Anchor Protocol on Terra. You can earn 19.5% on your UST on your US Terra. So earning 19.5% on your stable coins, that's enough to outpace inflation, which is, the initial reason why you don't want to be in dollars or stable coins is because inflation eats away at it. But if I can get 19% plus on my stable coins, I'm a little bit more comfortable with a larger allocation. And I've got that larger allocation to dump into the market at rock bottom prices if we start to see that out of the market. So I'm going to stop sharing my screen now, and then we can go into a little Q&A session.
All right. Did you get anything through Menti?
Yep. So
all right.
The first question is, if we are actually going into a bear market, how would you recommend earning passive income? What protocols are you using? So that's a good question. And that's a very, very broad question because there's so many passive income opportunities in the crypto space. And passive income is the word passive is kind of a misnomer. I don't know that there's anything that's extremely passive. Obviously, staking, you buy it and stake, but those staking and the DeFi yield opportunities are constantly changing. And if you really want to maximize that income that you're making in a bear market, you don't want to be too passive about it. You want to be somewhat active about it and keep up with the market. What are the latest developments in stablecoin yield farming? What's going on? Where are the best opportunities? Because you can earn 30+% on your stablecoins if you're willing to leverage up, if you're willing to borrow against the stablecoins that you're earning interest on. You can leverage up and earn 30+%. But the offset, the risk of that is that if any of those stablecoins lose their peg, you get liquidated and you lose everything. So you need to do a little bit of research and understand the risk there. Personally, as I mentioned earlier, I'm using UST. I'm using Anchor Protocol. I'm getting 19.5%. They also offer insurance, where I believe you can get around 13 or 14% because you're going to be paying that 4 to 5% fee in insurance just in case something happens, UST loses its peg, or there's a smart contract hack. You get paid out and you don't lose your money. But I'm personally pretty comfortable earning that 19.5%. Other places, if you don't want to move money on chain, or stake or move money cross chain, rather, you can use a centralized lending protocol or project like Celsius or Nexo. There's multiple ones. I think Binance, a lot of exchanges have lending programs now too. So there's multiple options there. I mean, even if you just want to start averaging into some of these altcoins that have nice staking yields, like Polkadot, you can earn like 10 to 14%, depending on the time and where you're actually staking it at. I believe Cosmos is around 10%. Now, obviously, there's some dilutive effects, like there's some dilution that happens in the supply of these tokens that have staking mechanisms, but it's worth staking if you're going to own them. So if you're bullish on Cosmos and you want to take a long position on Cosmos, you can be buying it and staking it for a long period of time through a bear market. And then let's just say you bought, I'm just going to throw out an even number because for easy math, let's say you bought 1,000 Cosmos, 1,000 Atom. Atom is the ticker for Cosmos. And you were earning 10% over the course of a year. And then we had a year bear market, but you were still able to earn 10% of Atom tokens in that bear market period. You've now going into the next bull market, just assuming it's a year from now or Q4, you've earned 100 Atom tokens, 10% of your Atom. And then if Atom in the next Parabolic rally goes to 200, or not the $200, let's just say, let's keep easy figures. Let's just say it 3Xs. It goes, you bought it at 40, it goes to 120. You've tripled your money on that staked Atom as well. So I'm a big fan of staking just because you get that you get your return in the underlying asset that you're speculating on to begin with. Bill, any comments on that?
Yeah, I mean, I think you hit it, right? In other words, there's the stablecoin game, and then there's staking in stuff you believe in. We're looking at a security token play, Polymath. Our understanding right before the stream is that, staking, there's a possibility of staking that and getting up to 20%. So if you have something that like at 50 cents, theoretically, that you think is going to be a narrative for, the immediate future and the next cycle, right? Or the next rally, I should say, there is benefit to staking. Okay. Now, if you're going to panic and pay gas fees to pull it in and out, just be honest with yourself. Like, do I believe in this? Can I take this money and set it and forget it? Or do I need the stablecoin yield and keep myself a little bit more liquid? Now, I wanted to answer one question, which is really interesting from the chat. It's asking, is Bitcoin losing its store of value? Are people uninterested? Is it dead? Well, it's not losing its store of value narrative. I think that's intact. It's incredibly complicated to mine and create a Bitcoin from a computer science point of view. What you have to remember in crypto is that the danger is the Fed and central banks either printing less money, printing the same amount of money that they are now, which even in itself is bearish, or printing less and less money over time, eventually tanking crypto and stocks. So, everything that you like about your favorite crypto is still true, but what's getting weird is the macro environment, right? Is it a good time for speculative assets? So that's why Forrest is like, hey, look at stable coins and look at staking. So we gave you both a good question and hopefully a good answer.
Yeah, and on that topic of store of value and kind of the currency play, Bill, you and I have talked about predictions for 2022 and 2023 of potentially seeing hard money become a bigger narrative as we start to see the downstream effects of maybe a stock market crash, maybe problems in the legacy world from the printing of a ridiculous amount of money from inflation. One thing that's I've been thinking about personally is we've seen the layer one narrative completely blow up And you've had the narrative Ethereum killer, Ethereum killer, Ethereum killers. First it was Binance Smart Chain, then it was Solana, then it's AVAX. Now it's like Phantom and Luna. So we've seen the fracturing of the layer one market, the layer one space, right? And if you just look at any other big industry, look at any big industry on its way up, it eventually gets fractured to some degree. Look at Netflix. They were the first streaming service. Now, how many streaming services do you probably pay for? Probably like Paramount Plus, Hulu, Amazon Prime Video. All of these different streaming services exist, and they've eaten up a little bit of market share. Netflix is still the big man on the block, but the market has fractured. Ethereum, layer one, it's the first mover in terms of layer one smart contract networks. But we've seen that market start to get fractured. First, it was Cardano, really, what was supposedly the big Ethereum killer, but that one kind of flopped and didn't play out. But Bitcoin, we really haven't seen a big fracturing of that market, right? We haven't really seen big challengers. There's stuff out there. There's a lot of different forks of Bitcoin. There's Litecoin, there's Bitcoin Cash, there's Dash, there's Nano, which is my personal favorite. But I think in 2022 and 2023, we might start to actually see a bit of a fracturing of that market, a bit of saying, hey, we've got to take this thing seriously. But what is the store of value is great, but what is the currency play? What is the quick value transfer play? Is it Litecoin because it's a little bit faster? Is it Bitcoin on the Lightning Network? That's a big argument out of a lot of people. There's some issues with the Lightning Network. Are they going to be able to fix those? Is it Nano? Is it Dash? Is it Bitcoin Cash? I've personally taken a big bet that it's going to be Nano, but I could absolutely be wrong. What I do think, though, is going to happen is I think there could be a fracturing of that value transfer, hard money cryptocurrency play. And we're already seeing like Bill was just talking about Axia doing like a 9x out of nowhere. Token Metrics picked that one up. And yes, it's only at a $16 million market cap, but it's blowing up. It's done a 9x. Stuff, privacy coins, again, currency value transfer plays. Zcash, hearing a lot of rumblings about Zcash, honestly. Monero, another one, another privacy coin. So that's a narrative I think could actually take over in 2022 and 2023 at some point. Let's go to the next question. I want to take new positions in the metaverse and gaming coins. Any suggestions at the current level? Yeah, so I can briefly do some TA here on. I'll share my screen here again on Mana and Sandbox. So the thing about Mana and Sandbox are that they've recently come down to these levels. Actually, there's a level here at about 264 or 262, I believe it is. That was a big support level, and that's actually what it wicked down to. So our previous support level was 295. We identified that, and we got the bounce. So we had a big profit-taking opportunity there. But then Bitcoin and the rest of the market started crashing. Where's the support? 262. I think 262 is a strong entry point down here. But keep in mind, look at the macro chart for Decentraland here. It's got room to come down. 262 may be support, but if you actually look at some of these corrections from the last time it mooned up and then crashed in April and May of 2021 last year, we saw a 78% retracement. So in the short term, 262 might be a good entry and we could start to see a recovery. But if things get ugly for Bitcoin and we see a 77% retracement out of Decentraland here, there's room for it to come down to $1.33. And that would be kind of in line with, this horizontal support level here. And I'm not trying to scare anybody, but it's just the truth that if we zoom out here, I mean, Decentraland just went completely parabolic, and it wouldn't be the craziest thing in the world for us to see it trickle back down to these levels. So I think in the short term, if you're looking for a trade, 262 could be a good level to enter, but I definitely have a tight stop loss. And I'd just be aware that these things can drop significantly, right? Even if we go to Sandbox and we look at its peak back in May, right? We had an 84% correction, right? And we're currently hitting our projected levels as far as entry points. We just hit this first zone of $4.03 to $4.25, right? We barely wicked down into it, but if you had your order set at $4.25, it's already back up at $4.43. So this could be a good entry point that we're finding support at. But again, if we see an 84% correction, that could be the level that you want to wait for all the way down here, sub $3 to actually pick this up at. It's still uncertain whether or not Bitcoin's going to hold here at 42K. I think we have some support here. I think there's a really good chance that we go back up and retest 46K. But there's also the chance that we go all the way down to 34K. That's the big support level, right? There's a chance, again, not what I would say a massive chance or the most likely scenario, but there is a scenario where we do go into a bear market. And if we go into a bear market or continue to see this downtrend continue for Bitcoin here, altcoins can get wiped out here. And metaverse is a strong narrative, but you have to understand how overextended it is in the macro picture, even against if we were to draw just kind of this long-term trend line here. We could easily see this trade come all the way down to this long-term trend line before spiking up again. And that would give you an entry point as low as $2.11. So that's why I think it's worth keeping some of these, like a higher allocation of stable coins, because if you have a 30% allocation to stable coins and then this scenario does happen, you have money to pull the trigger on these amazing entry points that could appear. Bill, any take on metaverse this year?
Yes. So as usual, Forrest is right about wanting to get some of the metaverse tokens as cheaply as you can. I mean, right now, it doesn't feel like a market where you have to like run out and buy something because, you know, a massive uptrend is going to start tomorrow. If the Federal Reserve goes on the warpath or there's an issue with Omicron, then, you know, it's possible to get lower prices in metaverse tokens, possibly dramatically lower prices if there's a mess with sell in May and go away. I know that feels far away, but it's not if you buy a token at $5 and it goes to $1.80 and you're selling it where you should have been buying it. So I would say if you can't deal with not having a metaverse position, I get that. You know, you can have a small position so you're involved. And that position could be, you know, relatively small so that you can focus on it. And if it drops, you don't care really, right? Because you're going to add more later, say in May or October. Now, metaverse land, metaverse NFTs, okay? I don't have the exact thing in front of me going, okay, yeah, this NFT, but I suspect there's going to be a huge divergence, right? Metaverse tokens are going to be subjected to whatever risk assets get subjected to. Art, land, and NFTs with functionality are going to perform, in my opinion, a lot better than the metaverse tokens. Now, that doesn't give you an actionable idea today. The actionable idea is to preserve capital so that when the idea or when the sort of the trade in metaverse and NFTs reveals itself, you'll be able to take advantage. If it's NFTs and land, boom, you're there. If it's the tokens in March, May, or October, boom, you're there, right? The hardest thing to do in this crypto market, because of the amount of gratification people historically had gotten, is to wait, right? The key with the metaverse is to wait. Now, why am I waiting on the metaverse? We all know, anybody who watches this show, I'm a huge metaverse fan, right? I'm waiting for two reasons. One of our quant guys took one look at us last week and said, de-risk in the metaverse. This guy never talks like that. And he's one of the smartest guys we have. So I'm like, ooh, tough to buy the dip when one of our best quant guys is like, yeah, get out. Okay. So, you know, you want to have capital for when it turns. You don't want to get caught. Now, the other thing about getting caught is once upon a time when the internet was invented, like when the internet and PCs exploded between 1998 and 2000, there was a 2-year crash in internet stocks. 2-year crash. Okay. I don't think any reasonable person thought the internet was going away. PCs, Windows, connectivity, Web 1.0 was going away. The question is, what was it worth? Right? First, it was worth a lot. Then it was worth nothing. And then the market found a happy medium. I suspect with the metaverse, when you have people giving up, or if there's ever any such thing as a metaverse give up trade, that's when you get in. So with the metaverse, remember the history of the internet. Yeah, it's the biggest trade ever. Yes, you can dollar cost average if you've got the capital. But with the metaverse, the most important thing you can protect is your sanity. So when time comes, you are there.
Absolutely. All right, so let's go into the next question. And the next question is about helium in audio. Picked up HNT in audio during the summer, continued to DCA under current conditions, not financial advice, of course. Yeah, so I can share my screen here again and jump into Helium TA. So Helium Network's really interesting in that they have the network effect. And while they are a crypto solution, they're really separated, in my opinion. They're not doing smart contracts, right? They're doing network coverage. It's something totally different. So this is something that I can see as a really, really good diversification play in anybody's portfolio, because and they've got a partnership, by the way, with Dish Network. But if we do go into a bear market, why? Just because Bitcoin and layer one solutions and metaverse might not be doing well, why should that really negatively affect Helium Network, which is something totally different, just uses blockchain technology, right? It's just its own layer one network. So, all right, we've broken the trend line here, which does make me uncomfortable. However, we did break the trend line back here and then recover back on top of it. So that can always happen. So what I'd be looking for out of Helium is for it to try to get back up onto this trend line and push up higher to $55. Now, this is a resistance level here at $37, right? I'm not going to type it out. Here is a support level at $27.50. So like I said, big believer in buying support, selling resistance, buying support, selling resistance. We had a little bit of support from our 2x short level, or rather our 1x short level, as I should start saying now, providing some support on this bounce here. But if we're really looking to get into Helium Network, I'd be okay paying $27.50 for it. I'd be okay with an entry at $27.50. And we could potentially talk about some deeper levels if we see the market continue to degrade, maybe $22, but $27.50 should provide us with a decent entry point, at least in the short term. At least in the short term, we should see some sort of a bounce up here. I wouldn't mind buying 27 and then selling 37 if we got that bounce in the short term. Audius, the level to buy for Audius, in my opinion, is $1.05. We saw originally we saw consolidation onto this level before a big drop. We saw it as resistance and then support. It's currently our 3x short level from our $2.15 top here, or $2.10 local top. So anywhere between like $1 and $1.10. Really strong support here for Audius. The other thing is I have marked out the vesting schedule for audio tokens, right? So they vest quarterly in chunks. Usually you get a really nasty little bleed into this vesting, and then you get at least some sort of, you may not get a pump, but you at least get a bounce, right? So then we bled into the next vesting, and then we actually pumped, right? Bled into the last vesting, got a nice little bounce after it. So right now we're bleeding right before these tokens vest, and once these token vests, we should get some sort of a bounce. So I think $1.05 should be a decent level to buy if we go that low. I'll stop sharing my screen again here, and we'll go into the next question. Unless, Bill, you had anything on Helium and or Audius?
No, I think you covered it. Well done.
Cool. All right. So chrono.tech, awesome pick. Thanks for the TM grades on this coin. I am on it since 192, and today it's 385 plus and still going. Thanks. So that's somebody saying thank you for the token metrics dashboard picking up on chrono.tech, which has gone parabolic recently. So very awesome when you can make money when the rest of the market is just crashing. Next question is, wishing you all the best, Forrest. Bill is going to miss your company. Give us your best altcoin picks today before saying goodbye. So, guys, if you didn't receive the email already, yes, I will be leaving Token Metrics, unfortunately, at the end of this week. So I will miss everybody at Token Metrics. I will miss this entire audience. Personally, I will be staying in the crypto space. I'm not retiring from crypto. I will be on YouTube on my own channel, so you can always just subscribe and follow me there. It's Crypto Stackers is the name of it. And I will absolutely miss all of these tremendous working relationships here at Token Metrics. Now, before I should have mentioned this at the beginning of the stream, but we actually do have a live stream tomorrow at 11:30. It's a little special extra farewell live stream for my departure from Token Metrics. It's been phenomenal. It's been great, but we're gonna have some fun tomorrow at 11:30 a.m. Eastern time on a farewell live stream. So make sure you tune in for that. My best altcoin picks. So that's a tough question because now, obviously, there's different time frames for that. Long term, and I know it's probably the running joke. People are probably thinking like, why does Forrest have so much nano when it's just been going down? It's sitting in a downtrend. Well, I follow the project really, really closely, and I believe that long term, what they're building and what they've built so far, and the partnerships that they're working on, really conducive to it being a big play moving forward. And it's actually extremely cheap right now. So my largest altcoin position period is Nano. And I know it's not performed well lately, but it's a long-term position. It's a multi-year position for me. We just kind of talked about Helium and Audius. Both of those coins are relatively cheap. Helium's pumped lately. It's I'd like to get it a little cheaper. I'd like to get it under $30 at least. But I think Helium, great diversification play long-term. Really good project long-term. Moving into 5G as well. Audius, I know, again, it hasn't been the most stellar performer over the last year. And since it peaked up at like $5 and it's now dropped down. But again, you can stake it. I've been earning 20 to 40% APY on my Audius tokens. I earned so much Audius I've increased my bag by 20 to 40% just by staking it for the last year, which has offset a lot. And I truly believe in bringing decentralization into the music industry. So a lot of the altcoins I'm talking about they're really long-term plays. They may not be trading the best over the last several months, but they're projects that I believe are really high quality projects that can survive for a very long term. So it's not the coolest, latest thing or the next fastest fad of a layer one that's going to make you money tomorrow. But I'm going to give you alt picks here that I believe in long term that I back up with my portfolio holdings. One more, and it's one that we've talked about a ton. Time Wonderland. Right, Frog Nation, Daniela Sesta, and Andre Cronje. These two DeFi devs are building this ridiculous ecosystem in both the Avalanche ecosystem and the Phantom ecosystem on both of these layers and Ethereum for that matter. But Time Wonderland is like the DAO, the backbone of that ecosystem, right? So, they've got Popsicle Finance, Yearn Finance, they've got Abracadabra.money with MIM and Spell. So they're building this ecosystem. And my take on this is I'm just going to kind of own Time Wonderland, stake it over time, get this great APY, these great returns from that without having to expose myself to all the other projects that they have. Like Bill said, though, Yearn Finance, probably going to explode. And that's part of this ecosystem that they're building. So anything in that ecosystem I'm pretty bullish on. I feel like I can get exposure to a lot of it by owning Time Wonderland. So those will be my altcoin picks to answer your question there. Bill, do you have any altcoin picks before we wrap up here?
Well, I just started today on my list. I'm definitely looking at Rune, and I'm definitely looking at Yearn. One question I had for you, if you don't mind, just quick. Now, with Time Wonderland, did you go in the market and buy that directly, or did you make a deposit, or sell ETH into their treasury? In other words, can you give me some color around that?
Yeah, so I kind of initially experimented around with it. I did bond. It's called in Time Wonderland. It's called minting or bonding, right? Where you actually sell your ETH into their treasury, and they give you time at a discount. At the time that I actually started like bonding in, it was like a 9% discount. I'm not sure what it is currently, but I did mess around with that a little bit. Because you do get it at a discount, but the bulk of it I just bought all at once and then staked it, right? So I messed around with both. Being on AVAX, the gas fees for actually bonding it and then staking it every single day, they're really not too bad. So that's not a bad path to go down. But then the cool thing with their DeFi ecosystem, they've actually allowed you to take your staked time, which is called memo, wrap it up and move it and deposit it into abracadabra.money and borrow against it, right? So you can borrow against something that is staked and earning you money. So it's essentially like liquid staking. So when the price of time drops really, really low, what I personally do is I take a loan out against my staked memo, my staked time, and I buy more, right? Because I think it's going to bounce. I want to buy it when it's cheap. So it's really, really interesting what they're building and the utility that they're having across multiple chains, across multiple DeFi protocols. So big fan of Time Wonderland, and still holding mine strong. And I have such a large position in it compared to the rest of my portfolio. I don't plan on accumulating any more anytime soon, but I don't plan on selling anytime soon either.
All right. Thanks for that, Forrest. All right, Forrest, I think that's a wrap on the questions. Do you think? Yeah,
that's going to wrap it up for us.
All right. So tomorrow, stay tuned, 11:30 Eastern, as we salute Forrest, right? The word is salute, right? He has done a great job, and he has taught me a lot. So for today's Monday stream, that is it for the Bill Forrest tandem. All right. We could bring back an encore later on after Forrest gets his own thing up and running. He's on Crypto Stackers. So definitely check out Forrest, stay with Forrest, and of course, stay with us and our sponsor, tokenmetrics.com. So folks, that's it for today. We appreciate you tuning in. We will be on the special live stream tomorrow, and the market update will start up after that, later in the week. So stay tuned for all the volatility in the markets. This is Bill Noble from Token Metrics. We will see you tomorrow.